Good morning, Thirsty Thursday. All right. So, as you could tell by the news articles, nobody knows what's going on, right? So basically, we're at a point where we can go either way. We can start moving up aggressively or down aggressively, and I think that everybody is kind of sitting on the sidelines, waiting for the Fed rate decisions and some of the economic indicators. So what we got going on is um, really not much going on today. We got initial jobless claims, which is every Thursday, so that's cool. That's some insight. We can look at EIA gas stocks, give us a feel for what's going to go on with gas prices. But I think we're peaking that. Tomorrow we got core inflation, inflation rate, which obviously that's on everybody's mind. So this is what we want to see. Previous was 6.2. We come in below that. That's going to be a good indication that things are tapering, and we might have peaked out. And whoa, easy now. Then year over year, forecasted 8.3, previous 8.3. So we'll see if that continues. Now, you see a lot of retailers, box companies, which before couldn't get product, couldn't get material. Now there's a gluttony, right? So they're going to start cutting deals. You're going to see sales. You see home sales slowing, and you're going to start seeing the reduction in prices. This is it, man. And it happens before the market responds, really. So you got to look around. You got to look around. Everybody's waiting on these reports, but even these reports are old news. What's happening today, and then you have an understanding, and that's how you position yourself long term. But these reports, things like that, you could trade on that real time. So, all right, I'm babbling. We all know this stuff, right? So the ECB came in with a projection of interest rate hikes during their July estimates or their July meeting. That caused this spike down in the ES. Um, Currently, it's trading up 9. It was up 19 or 20 earlier before the announcement. But yeah, knee jerk reaction, if you ask me. I mean, I'm going to watch it, but I'm really not expecting that it will sell off or sell off too much further. I think we're going to stay around here and maybe go back up into the 20s. But if you look at what's going on, man, we're just continuing in this consolidation. Everybody's just waiting. I mean, why get involved? Let's see what tomorrow has to hold. Let's see what the unemployment numbers have to hold. We'll probably stay within this restraint or consolidation until we get those numbers out and close the week in this fashion. It's the 15th that the feds come out. I mean, it's just prudent to hang out, wait for that, see what's what. Prudent. I mean, this is a real nice long consolidation. I mean, we've been going for like 8 days already, just consolidating in this area, and you can see the momentum flattening out. The momentum flattening out on the daily. Maybe we make a higher low. I mean, that's what we want to see: higher low, and then start moving up. I mean, it could make the turnaround right here. This is setting up nicely that it could turn around. Although, we could continue a rundown and change the look of this pattern. But this is enough time and a good amount of energy being built up here. And this would be a nice trend reversing pattern. So, yeah, I want to keep an eye on that. I'd like to see the trading range come down a little more into the 60s. I mean, this is crazy, man. This is just crazy, like 90s. I mean, we were up at about 126, a trading range of 126 points on the S&P, dude. That's nuts. So, yeah, I want to see things taper out. That's more important to me even than moving up. I mean, eventually we're going to make that move up, but just that crazy volatility, that's just very dangerous for people. Even long-term investors, they have stop losses in there. They figure there's a breakdown at a certain price point, and these volatile swings are actually just triggering these stops and knocking people out of positions they shouldn't be knocked out of. So it's great on the trading end, and you'll see next quarter a lot of banks who kind of initiate this volatility. But the bigger institutions who are trading, they're going to have their earnings are going to come in strong because of better than expected trading revenue. Because they initiate this volatility, and they do it into the summer, and then they back off on the summer so they could hang out in the Hamptons and don't not have to worry about the market, and that's where you get the summer doldrums. So that's what we're watching for, summer doldrums. BTC kind of doing the same thing. A lot of nonsense coming out of BTC in news and things of that nature, and a lot of retail traders are losing the initiative or interest. And I've seen it time and time again. It's kind of damaged goods right now for a lot of people who got in late and try to make that big money and make the news and everything like that and have those life-changing experiences. And they got hurt, and people get hurt on securities, and they back off and they don't buy it and they go to another vehicle where everything has its day, and it doesn't change the value or the fundamental of this security. And I've seen it time and time again, with brokers that have worked at my firm and that I've raised. They take a beating in a certain sector, whether it's biotech or telecommunications or airlines. I remember a big beating in airlines in 2004, I think it was. And a lot of I'll never touch airlines again. And you can't look at it like that. Everything has its day and its time, and BTC's getting a little beat up. But the reality is that digital currency is going to be with us one way or another. The technology behind it is very good, and it just has to find its place. And it may be government currency, but that decentralized currency, I don't think that's going to really fly, because again, as I've been preaching, governments aren't going to give up that form of control and power. And you don't believe me? Do a little homework on the Civil War and find out what that was all about. I know what it's marketed as, but find out what it's really about, and and you'll understand that they need to protect their currency. It's a matter of national security. So I digress. I should have left a trail of breadcrumbs when I started on this path. Anyway, still a viable trading security. We're just going to have to go through this consolidation and see what it looks like when we come out of this. And I mean, depending on the volatility and your style of trading, I mean, it may be no better than trading the S&P. Or any other I mean, you could trade Tesla and get volatility in it if you're just trading. So we'll see where it lays out. Anyway, that's it. I'm still waiting for the interest rates to roll around. I mean, there's a huge divergence here. I don't think this is going to sustain. Actually, I think we're within a day or two of it rolling around. We'll probably test the high one more time, barring any ridiculous fundamental change or geopolitical change. I think we'll probably see this thing start to turn around. So that being said, I'm not going to drill down any further. Subscribe, hit the bell, hit the like. Everybody be conservative. Get an idea of what's going on. I mean, we could be pretty confident that the Fed's going to come out with $50. It's the bold trader who trades on that expectation. It's the guy who grows old as a trader who's just going to wait and see what the Fed does and then react. So I think that's what's going on. Just a lot of people sitting back. I mean, you might as well wait. It's going to be the 15th. Today's what, the 9th? Yeah, boy, today's the 9th. So, you sit back, you wait, see what goes on, and then, make a move on your portfolio. All right, subscribe, hit the bell, hit the like, throw me a few bucks, spread the word, and good luck trading.